Gentlemen, welcome back to the channel. My name is John. I got options, and today we are talking about 4 stocks and 4 trade ideas that are on my radar. Now, before we get started, as always, this is not financial advice. I am not a financial advisor. This video is not a recommendation to buy, sell, trade any stocks, any options. So let's get into it. So today we're looking at 4 stocks that I think could massively outperform through 2028. And these aren't random momentum names. These are companies where the earnings growth combined with valuation could create some absolutely insane upside over the next few years. We're talking about DoorDash, ServiceNow, STMicroelectronics, and Vishay Precision Group. Plus, I'll show you some high risk, high reward call debit spread ideas for each one of these. Now, let's get into it. First up, we have DoorDash, ticker DASH. Right now, the stock is trading around $160 per share, and 2028 earnings estimates are around $6.73 per share. If DoorDash trades at 40 times earnings by 2028, that gives us a price target of roughly $269 per share. That's about a 68% upside from today's price. And honestly, if DoorDash keeps expanding beyond food delivery into local commerce, advertising, grocery, logistics, then the market may continue rewarding it with a premium multiple. The optionality here is huge. Now, here's the option trade idea that I have on my radar. A January 2028 call debit spread of 200 and 260. This option trade could potentially return around 4x if DoorDash reaches those levels. Again, high risk, but the asymmetrical upside is what makes these setups interesting. Next up is ServiceNow, ticker NOW. This one is basically becoming the operating system for enterprise AI workflows. The company already dominates enterprise automation, and AI is only making the platform more valuable. ServiceNow is currently trading around $95 per share, and 2028 earnings estimates are around $6.13 per share. Now, if the market values the company at 25 times earnings, that gives us a 2028 price target of about $153 per share. That's another 68% upside opportunity. And if enterprise AI adoption accelerates faster than expected, those numbers could still prove conservative. Now for the option setup. We have a January 2028 call debit spread. Buying the 100 and selling the 150, this spread could potentially return around 3.7x. So now the third stock on our list, and probably the most controversial one, is STMicroelectronics, ticker STM. This one almost nobody talks about compared to Nvidia or AMD, but STM sits right in the middle of some massive long-term trends. We have 800-volt EV architectures, we have silicon carbide power chips, industrial automation, satellite infrastructure, and potentially even power management for AI orbital data centers. So, STM currently trades around $61 per share. 2028 earnings estimates sit around $3.41. Now, if the market decides to value STM at 50 times earnings during the next semiconductor cycle, that gives us a price target of about $170 per share. That's roughly 178% upside from today's price. And honestly, if silicon carbide adoption explodes the way many expect over the next several years, STM could become one of the biggest winners in power semiconductors. For the option trade, we have a January 2028 call debit spread. Buying the 85 and selling the 95, this call debit spread could potentially return around a 5x. And finally, probably the smallest and highest risk stock on the list is Vishay Precision Group. Now, most people have never heard of this company. This company is valued at about $1.29 billion market cap. This is a small company, a lot of upside. This company is fascinating because it has exposure to precision sensing technologies that could benefit from automation, robotics, industrial AI, and potentially humanoid robotics over time. Management has already discussed growth initiatives with new customers and new platforms. The stock trades around $99 today. 2028 earnings estimates are around $3.07 per share. If VPG trades at 70 times earnings, that implies a price target of roughly $259. That's around 160% upside from current levels. And because VPG is such a small company, if growth accelerates, the stock could move extremely aggressively. Now for the trade idea, a March 2027 call debit spread. Buying the 110, selling the 150 could potentially return around a 4.4x. Now obviously none of these trades are guaranteed. These are all high volatility, high risk growth names, and options can expire worthless. But when you combine strong earnings growth with multiple expansion, sometimes you get explosive moves that the market completely underestimates. And that's the entire game. Find businesses where earnings could massively inflect higher over the next 2 to 3 years before Wall Street fully prices it in. Drop a like if you find this interesting, subscribe for more content like this, and comment below. What are your favorite stock picks for 2027 through 2028? Also make sure to check out feedmetrades.com to track your option trading journey. Stay healthy, stay wealthy, and stay tuned for the next one. Peace.